Welcome to the deep dive. We often talk global strategy, but today we're really zooming in. We're looking at a super competitive sector, industrial equipment for fish and seafood processing.
That's right. We've got this detailed market research report done for a company called BigFish.
Okay.
And our goal really is to pull out the key intelligence for a company like BigFish to help them grab these huge global opportunities.
So we're talking machinery. What kind specifically? The report mentions a trade code.
Yeah, HS code 843850. Basically, it covers the guts of a modern fish processing plant.
Okay.
Think big processing machines like slating systems, but also all the supporting gear. High-precision workbenches, automatic scales, disinfection tunnels.
Conveyors, sorting systems, the whole complex setup.
Exactly. It's the whole ecosystem.
Right, so not just basic metal bending. This is pretty high-tech industrial stuff. And Big Fish, they're described as a young, dynamic player.
Yeah, a pioneer. They focus on things like control scales, automated fish graders, they call them graders, sophisticated coding, labeling systems, hopper scales, conveyors.
So quite a range.
Yeah.
And they're aiming high, looking to be a leading international name.
That's the plan. They're positioning themselves to challenge the established giants in the field.
Okay, so for you, the listener, what's the big takeaway today? What are we trying to figure out?
Well, it's really threefold. First, where's the global market really heading? Not just value, but activity. Second, how does Turkey fit into this? It seems to have this surprisingly strong strategic position.
Right.
And third, nailing down those specific high-potential markets where a brand like BigFish can step in right now and fill what looks like a pretty massive gap in the market.
Okay, let's start big picture. Industrial machinery, food processing. You usually think Germany, Italy, right. The big European players. Is that still the whole story?
Historically, yes, absolutely.
Yeah.
And look, the fish processing industry is changing incredibly fast. It's all driven by sustainability demands, massive automation needs, and of course, food safety standards getting tougher everywhere.
Sure.
And for decades, yeah, the export heavyweights have been Germany, the Netherlands, Italy. Together, they still pull in something like 55% of global exports by value.
55% by value. That's huge. They make the expensive, top-tier stuff.
Exactly.
But this report suggests things get interesting when you look beyond just the price tag, when you look at the sheer volume of shipments.
That's where the picture gets really dynamic.
Yeah.
So yeah, the big money importers are still the traditional ones. The U.S., for example, is the largest by value spending, somewhere between, $315 and $339 million a year on this gear.
Okay.
But the key trend, looking at 2024-2025 forecasts, isn't about the highest price points anymore. It's about the incredible accelerating volume of actual machines being shipped out, and they're heading towards Asia and the CIS countries.
Wow, okay. That sounds like a major shift, like fundamental trade patterns changing right under our noses. So what's the data point that really flags this? Which countries are suddenly buying all this equipment?
Well, we look specifically at high-volume shipment growth. It gives you a sort of forward-looking indicator of where the actual investment, the building, is happening.
Right.
And the numbers are stark. The top three countries showing the biggest increases in physical shipments. They completely redraw the map.
Okay, lay it on us. What does that growth look like?
So leading the pack is Vietnam, an increase of over 3,196 shipments.
3,000 more shipments, just like that.
Just like that. Then you have Russia, showing an increase of 2,873 shipments.
Okay.
And third is Uzbekistan, with a jump of 2,715 shipments.
Vietnam getting nearly 3,200 new shipments of this kind of gear. That tells me they are seriously building out their processing capacity, investing big time in food exports.
Exactly. That's the critical insight from this volume acceleration.
Yeah.
It shows these emerging markets, specifically Southeast Asia and the CIS region. That's where the immediate operational demand is exploding.
Right.
I mean, Vietnam and Russia combined now account for around 39% of global import volumes. Not value, volume. The sheer number of units.
39%. That's not a small shift. That's a massive redistribution of where processing power is being built, like right now, away from the traditional centers.
Precisely.
Okay, so demand is booming volume-wise in these emerging markets. What's Turkey's role in this? The report says it only has about a 2% share of global exports in this machinery category. Is that significant?
Well, that 2% figure might be a bit misleading if you just look at it in isolation.
How so?
Because the report shows Turkey isn't just a player, it's gaining incredible momentum. It's positioning itself as probably the most compelling alternative to those high-cost European manufacturers, especially considering lead times too.
Okay, momentum. Let's see the numbers. How fast is Turkey actually growing its exports here?
The growth rate is, frankly, phenomenal.
Yeah.
We're looking at exports under the Turkish code GTIP 843850. They grew by about 80%.
80%.
80% in less than 2 years. The value jumped from around $7 million in Q3 2023 up to $12.5 million by Q2 2025 projected.
Wow. Okay, 80% growth in under 2 years. That's serious acceleration. It suggests the market is actively seeking out Turkish options.
Fully.
Now, Turkey's advantage is often just framed as low cost, but that can be a bit of a double-edged sword, right? Just being cheap can lead to a race to the bottom. How does a company like BigFish avoid getting stuck there?
That's a core strategic question, absolutely. But Turkey's advantage isn't just about low wages, it's more structural. Yes, the favorable cost structure inside the country is key for getting a foot in the door, especially against, say, German or Italian competitors.
Sure.
But maybe even more important is Turkey's role as a critical logistics bridge.
A logistics bridge. So saving time and money on shipping.
Yeah. Exactly. Its location, right between Europe, the Middle East, and Asia. That dramatically cuts logistics costs and transit times to those key emerging markets we talked about, the CIS region, the Middle East.
Makes sense.
And this isn't just theoretical. Turkey already has serious logistics capacity. Look at its own trade. It exported 81,000 tons of frozen fish in 2023. The infrastructure is there, and it's working.
Plus, there are regulatory upsides too, right? The customs union with the EU must help.
Oh, it's a massive differentiator. Being in that customs union gives preferential access to the huge EU market. Lower tariffs, simpler customs. It helps the Turkish companies stay competitive even in mature markets like Germany or the Netherlands, which you'd think would be locked up by local suppliers.
Right. And that incredible 80% export growth, it must be partly fueled by a strong domestic industry needing this equipment too.
Absolutely. You've got rapidly growing seafood processing capacity within Turkey itself. That pushes local engineering to improve. I mean, look at Turkish salmon exports alone. They went from $150 million in 2018 to $345 million projected for 2024. That's 132% growth.
Wow.
When your home market is growing, like the whole aquaculture sector is projected at like 4.1% CAGR through 2033, the machinery you build gets refined, tested, proven reliable. And that translates directly into confidence for international buyers. So if you combine that global volume shift with Turkey's specific advantages, the cost, the logistics bridge, the domestic proving ground, you can actually map out the best opportunities for a company like Big C.
Okay.
The report points to 4 key types of markets where these advantages really give them the highest potential return.
Right, let's break those down. Where should they focus first, based on this analysis?
Okay, first, Russia. The estimated import volume there is huge, over $130 million. But interestingly, the competitive pressure from the big European players seems relatively low.
So high volume, potentially lower friction to enter.
Exactly, makes it a prime target. Second, the Middle East. This region often means high profitability, partly because governments are investing heavily in food security and related infrastructure. And Turkey is already positioned to dominate things like frozen fish fillet exports there, maybe hitting a 64% market share. So the buyers know Turkish suppliers, the shipping lanes are established.
Okay, so Russia and the Middle East. What about closer neighbors?
Right. Third, Central Asia, specifically Uzbekistan. This is really the low-hanging fruit. It's geographically close, meaning logistics costs are minimal. Think about the speed and cost savings for an Uzbek buyer ordering from Turkey versus, say, Germany or Italy. It's a huge difference.
Makes sense. And the fourth area?
Fourth is Africa, using Nigeria as a key example.
Sure.
Now, purchasing power might be lower currently, but the demand is growing fast. This represents significant long-term potential as their own seafood processing infrastructure develops.
Okay, so that's a clear strategy for attacking those high-growth, often emerging markets. But you mentioned something earlier. The report had a really stunning finding about the established markets, too, about competition level.
Yeah, this was maybe the biggest surprise in the data. When we analyzed the known competitors and existing suppliers globally, it turns out only about 37% of the total global market for this equipment seems to be served by these identified players.
Wait, hang on. Only 37%. You're saying there's a 63% gap? 63% of the entire global market for this stuff is potentially untapped or underserved. How is that possible?
It's the single most critical strategic point in the whole report. And this gap isn't just in small niche markets. It's visible in huge economies. The US, China, Russia again, the Netherlands, other big European countries.
Why? Why would those major European manufacturers, the ones with 55% of the export value, leave almost 2/3 of the market space open?
Well, One strong possibility is they're laser focused on the really high margin, complex, bespoke projects, selling the complete $5 million automated processing line.
Right, the top end.
Exactly. And maybe they struggle to compete effectively or just aren't interested in competing on the more standardized mid-tier components. Things like the control scales, the basic conveyors, the graders, the very things where we're seeing those huge volume spikes.
Oh, okay, so they leave a void.
They leave a massive void, and that's perfect for a manufacturer like BigFish, who can come in offering reliable, proven technology, but at a much better price-performance ratio.
Got it. So the strategy for BigFish isn't just about chasing volume in Vietnam or Uzbekistan. It's actually a two-pronged attack.
Precisely.
Go after the high-volume growth in Asia and CIS, and systematically target that huge 63% gap in both emerging and traditional markets, using that price-performance advantage to fill the space the big guys are ignoring.
It's exactly right. But, and this is a big integer, but to pull off that dual strategy long-term, BigFish can't just rely on being cheaper. The report is very clear on the strategic investments needed to secure the future.
Okay, so beyond just market entry, what are the core priorities to avoid that race to the bottom trap we talked about? How do they build a sustainable advantage?
Priority number one has to be significant ongoing investment in technology and R&D.
Makes sense.
Because the future of this industry is all about sophisticated automation. We're talking next-level sensor-based sorting, AI-driven quality control systems.
You mean like AI systems that can instantly grade fish for quality, size, defects, maybe faster and more consistently than any human could?
That's exactly it. That level of automation is becoming table stakes, frankly, especially if you want to sell into highly regulated markets like the EU. Consistent R&D investment is the only path from being just a strong alternative to becoming a recognized technology leader.
Okay, R&D is key. What's the second pillar?
Sustainability. This has shifted dramatically. It's not just a compliance headache anymore. It's a real commercial advantage. The report mentions the EU's Green Deal specifically.
Right, I saw that. How does that play out practically?
Well, compliance with environmental standards, things like measuring and actively reducing the carbon footprint and water usage of the machinery itself, it's becoming a gatekeeper for market access. Companies that invest in making their equipment more energy and water efficient. They gain access to the higher-priced premium segments, particularly in Western Europe. Buyers there are increasingly demanding it. So sustainability actually becomes a ticket to higher profitability, not just a cost.
Interesting. So R&D and sustainability are the long-term foundations. How does BigFish tackle market penetration now? How do they efficiently go after that 63% gap across potentially dozens of countries?
The report emphasizes a very cost-effective, digital-first approach for rapid penetration. You don't need, expensive sales offices everywhere immediately.
Right. So we're talking digital channels, Google Ads, maybe YouTube showcasing the tech, social media campaigns, using LinkedIn to find distributors or partners in specific regions.
Exactly that toolkit. These digital methods allow for really fast progress with relatively low budgets compared to traditional methods. They're ideal for reaching those dispersed gap countries, like targeting specific buyers in the U.S. or certain European nations without massive upfront investment in physical infrastructure. It's like a strategic targeting rather than just hoping for the best. #tag outro.
Okay, let's wrap this deep dive up. The big picture seems clear. Global demand for fish processing machinery. It's diversifying like crazy.
Yeah, moving away from that traditional European core
Yeah.
and just spiking in terms of volume across Asia and the CIS region.
And Turkey, with that incredible 80% export growth, its logistics advantage, the cost structure, it seems perfectly placed.
Perfectly placed to do two things. Capture those immediate high-volume opportunities in places like Central Asia and Africa, and also strategically attack that enormous, almost unbelievable 63% market gap that seems to have been left wide open by the higher-cost incumbents.
The potential for short-term wins here, especially targeting those high-volume emerging markets, looks really exciting for a company like BigFish. But the report sounds a note of caution for the long term, doesn't it?
It does, because long-term survival and leadership demand a different kind of focus. The real test isn't just going to be getting market access. It'll be how quickly a company like BigFish can transition.
Transition from what to what?
From being seen primarily as a reliable, good value, maybe lower cost alternative to being recognized as a genuine technology leader in their own right.
Right.
Because the future market is, well, it's relentlessly heading towards automation and green tech, driven by sustainability rules, driven by AI integration. So the provocative thought maybe to leave you with is this. Given the serious cost of cutting-edge R&D and the investment needed to meet ever stricter global environmental standards, is a company like BigFish truly prepared to make that massive fundamental capital investment required not just to compete but to lead? Or will they risk being leapfrogged themselves when this current window of opportunity, maybe based partly on cost, starts to close?